Now I have a question for you guys. Higher chance of a tax audit. Americans that make between 25K to 50K or business owners? Business owners, the group that has a higher chance of a tax audit are Americans that make between 25K and 50K. So even as business owners, you guys don't get audited that much actually. And the reason being, I'm talking about relative to other groups, is because most business owners, they are getting the tax education. And when I'm talking about business owners, I'm talking about business owners that have LLCs. So if you're a business owner that has an LLC, a partnership, an S corporation, you guys have a much lower chance of an audit because the IRS knows that you guys probably did some things to know better. And the reason being is those businesses have the ability to defend themselves when they are audited, right? You guys have attorneys, you guys have money, you guys can hire someone like me to defend you in an audit. Whereas Americans that make between 25K to 50K, they get a bill, they don't know better. They're just paying that bill. Now, this is the section where I think everyone gets excited about is what qualifies as an expense. But before we start, I'm gonna tell you guys what does not qualify as an expense. So basically, anything that is personal care or personal clothing in nature, 99.9% of the time is not going to be tax deductible. First one, we're talking about hair, makeup, and beauty. That is not tax deductible. It only counts as a tax deduction if you're in the hair or makeup industry. If you have a photo shoot that weekend and you get your nails done, you get your hair did, tax deduction, that one time. But the other 45 times in a year, no, that is not going to be a tax deduction.